Hi everybody, this is Dan from Theta Trend. Today is Monday, February 11th, and it's about 5:45 a.m. Mountain Time, which is just under 2 hours before the market opens here. This video is a brief overview of what it looks like to trade the Theta Trend system. So right now we're looking at one of my personal accounts, and you can see in each one of these positions, or each one of these rows is a position. So I have quite a few positions on right now. I have cotton, energy, emerging markets, the euro, gold, Greek stocks, the Russell 2000, U.S. real estate, silver, the S&P 500, long-term U.S. Treasury bonds, natural gas, oil, and then international inflation-protected bonds. And then I also have a few Forex positions open down below here, but those aren't really related to Theta Trend. So, that being said, I have an open profit on the account of about $500 right now. And these are all live trades. This is my personal account. But each one of these positions is really fairly small. In almost all cases, I'm trading just one contract, or I only have a few shares on, 30, 60, 50, 30. So this is a fairly small size. And the other takeaway is that there are a lot of different markets in here. And theoretically, each one of these markets is uncorrelated. And that's how we smooth out returns using Theta Trend. So let's jump over here and look at a price chart of the Russell 2000. And right now on Friday, the Russell closed here, I think all-time high at 90.86, basically right up there at the top. And my open Russell position is down here around the 84 level. I have a short option at 84, and we'll look at a picture of that here and in just a minute. But the way Theta Trend works is we use a price-based indicator to determine whether to trade long or short. So in this case, we've been long IWM for a while, and this 84 level is our level. And this position was actually opened up after the gap up here. So somewhere in here, this position, Theta Trend said, hey, we need to be long this market. And really, we'd been long the market from down in here, but we still need to be long the market, and I needed to open a new position. So after the gap up, it was time to continue building a long position. So if we jump over to the Analyze page, we can take a look at what that Russell position looks like. So if you're familiar with the risk graph, you'll see that the short vertical we have here has the short option at 84 and the long option at 82. And these are both puts. And at expiration, there's a potential profit of $48, that's the initial credit, or a potential loss of $152. And right now, price is up here at 90.80, and that level we were talking about on the chart was down here at 87.74. So even if price goes all the way down to that 87.74 level, and let's just take a look at it again, that's this level here. This is where we're going to say, trend has reversed and we need to get out of this position. And that's why I have this alert in the market, is that it will send me an email and alert me that things are going wrong and I probably need to get out of my trade. So if things go wrong, I'm going to get out of my trade, and it looks like I'll have a profit of under $20 or so. Let's call it $10 or $15, just to be conservatives. So one of the great things about trading this way is that I make money if price moves in my favor, and I also make money based on time. So over time, this white line here, which is our risk today, will begin to move back. And if we advance the day, we can see here that that white line begins to move back, and you have more profit open. So a few days ahead from now, we'll have $20 instead of the initial, I think it was around 18 or so. Yeah, let's call it 18 and a half. So over time, you become more profitable even if price stays at the same price. Let's just run through a couple of other trades that I have open here right now. Let's see. we can go to EEM, which is the emerging markets. So this is sort of international stocks. Silver here is trading about 30.22. Gold. So this is sort of interesting. Gold is the opposite position. So if we were short a market, this is what our position would look like. It's just the opposite of the long position in the Russell 2000 or the IWM. But this is what a short vertical would look like for us if we want the market to go down. And now we're looking at the oil position and the natural gas position. And it's sort of interesting. It looks like the natural gas position is slightly underwater, 18.20, so it's right around break even or so. But that's not a big deal. We have rules for managing risk, and there are definitely losing trades, and the point is that over time the winning trades add up to much more than the losing trades. I guess the takeaway from all of this and all of these different positions is that using Theta Trend you can trade any market, and we do trade any market. So our goal isn't to pursue complex option strategies and make a lot of adjustments. I only have one adjustment, and that's to close a position, and I don't try to roll down or roll up and incur more risk. I just try to manage the risk in the position, and if the price says that I'm wrong, I'm out. It's really simple. The other purpose of just trading one strategy is that you become really good at it, and you can master that strategy and apply it to a lot of different vehicles and spread out your risk and increase your returns. So if you're interested in learning more about Theta Trend, visit me at thetatrend.com, or you can send an email to info@thetatrend.com. Thanks.